We'll move on to our next session, which is an interactive panel discussion, building trust and transparency, how technology can fight financial crime and build inclusive, fair financial ecosystem. I would like to welcome Mr. Shane. 1 second, I'll just... Hi, good morning, Mr. Shane. How are you?
Hi, Yusuf. Yeah, very good. Thanks. How are you?
I'm good as well. Thanks for asking. Ladies and gentlemen, Mr. Shane Riedel, the co-founder and CEO for Elucidate, will be the moderator. I'll bring in the other panelists quickly so we can... I think we've got everyone. Mr. Shane, without any delay, the floor is yours.
Cheers, Yusuf. Thanks very much. And thanks to the organizers for the opportunity to discuss this really important subject. So just again, to recap, the subject of today's panel is building trust and transparency, how technology can help to fight financial crime and to build inclusive, fair financial ecosystems. So we've got a great panel gathered today, so I'll quickly come on to introducing them. Our first panelist is MaryAnne Scicluna from the Abu Dhabi Global Markets, where she's a senior executive director responsible for banking and insurance. Our next panelist is Manuel Iglesias, the chief risk and compliance officer at BUNA, the regional payments platform at the Arab Monetary Fund. And last but not least, we've got Mohamed Afifi, the chief compliance officer at Banque Misr. Thanks to all of you for your participation. For me, a quick intro. My name is Shane Riedel. I'm the CEO of Elucidate. We're a data science company offering the industry's only standardized and universal financial crime risk benchmark. 3 points to note: we're regulated by the BaFin and the ESMA as a benchmark provider. Secondly, we offer real-time comparable financial crime risk ratings for around 17,500 financial institutions globally, aimed at reducing friction and subjectivity around the understanding of financial crime risk, both within and between financial institutions. And lastly, a version of these financial crime risk scores is available in our open source database at elucidate.co. Quick administrative note, as Yusuf mentioned, the intention here is to be interactive. So please feel free to send your questions through the platform as and when, and we'll come on to them during the course of the discussion rather than waiting for a Q&A at the end, although you can also wait till the end if you prefer. Just 90 seconds to introduce the subject before we come on to the discussion. Trust and transparency are really essential for the optimal functioning of markets. And the focus of this session will be on financial institutions, and particularly the relationship of FIs to one another in a cross-border context. So the benefits of trust mean faster processing, lower costs, and greater operational stability for FIs. Conversely, a lack of trust and transparency results in delays and disruptions, sometimes with quite catastrophic consequences in the form of partial or even complete disconnectivity from international markets, as we've seen in sort of de-risking over the past decade. So trust and transparency are prerequisites for FIs to engage internationally and to serve their corporate and retail customers, but increasingly can't be taken for granted. So with that, I'll put this question out to the entire panel, and we can start with Mohamed. What do you think are the biggest hurdles, or what is the biggest hurdle in building trust and confidence between financial institutions? And are there challenges which are specific to MENA that you're looking to tackle in your role? Mohamed?
Thank you, Shane, and good morning, everybody. I believe the biggest challenge, as you all know, the MENA region is classified vis-à-vis the international market as a high-risk place. And people within that region should understand that in order to build the trust and transparency with the international, especially the clearer, they should have their data should be clear, their contact with the client you know, the data start with the KYC. So if they have the full information of the client, the full data of the client, that will reflect on their contact, on their transaction with the international clearer. People sitting in New York or sitting in London or in the international market, they don't know, most of them, they don't know about the region. They don't know the expert about the region. Sometimes we have faced in real life questions coming from the correspondent asking sometime about the name of a street who might have the name of Syria. So you should be very clear when you mention things that might be trigger an alert on at their end. So this is number one, and definitely due to the high cost of compliance in the region, many of the banks, I don't want to say lots, are not investing in the technology on the compliance side, or they're not investing enough even in the resources of the compliance. So you find that the clearer or the correspondent banks, they find difficulties to gather information about any transaction from the region. On the other hand, they are also facing a tough regulator, whether in the US or in UK or elsewhere, the tough regulator, which gives them a certain timeline in order to respond to any request or to any alert. So in my opinion, this is the biggest challenge banks should do it, which to have correct data and sufficient information where they can respond timely and accuracy to their clearer or their correspondent.
Thanks very much. MaryAnne, what would you add?
Hi, good morning. Yes, I think there is scope for more mutual recognition of regulatory frameworks and increased collaboration between authorities. Having a more harmonized regulatory framework will help to build also on what Mohamed has just mentioned in terms of information about the region, in terms of also the comfort that needs to be given to correspondent bankers by financial institutions. And this increased collaboration and mutual recognition could also benefit from discussions related to risk appetites. Risk appetites in different jurisdictions differ, and those have different impacts also in terms of the regulatory approach adopted in different countries. I think those could add substantially to increase this trust and transparency within the region.
And when you talk about regulatory harmonization, do you mean that primarily in a regional context, or do you mean also sort of bringing in the College of Regulators from Europe, Asia, and America?
Well, it could work on different levels, and it's not necessarily harmonization. It's because harmonization, some people may think of harmonization meaning identical approaches. It's more mutual recognition and mutual understanding of each other's frameworks, which can then filter down to financial institutions, because obviously financial institutions that are operating on a cross-border level have different compliance obligations and need to give comfort to their own regulatory authorities regarding their operations in these different regions. And if the regulator is already aware and comfortable with the region, that makes life easier for everyone.
Thanks very much. Manuel, from your side?
Thank you very much, Shane. First of all, thank you for the organizers of this relevant event, and to you for inviting me to take part of this interesting panel, and for sharing some of our experience from the BUNA point of view. So talking about cross-border activities and cross-border and specifically cross-border payments, we all know that the current model has a lot of challenges and frictions that are currently in the center of the agenda of many of the international bodies like the G20, the CPMI, and also the FSB. So in terms of that, of these challenges and frictions, it has been very clear put on the table that this is high cost, low speed, but also limited access and limited transparency. Of course, all of this is coming from a lack of trust as well between the financial institutions and between the jurisdictions themselves. From that perspective, I believe that BUNA is playing an important role in moving this agenda forward and helping to build trust among the region and among the financial institutions in the region. For building this trust, of course, the regulatory support is very important. So being a public initiative and having the support of the central banks in the region is key for getting this objective, or for getting to this objective and building this transparency. But also in line with what MaryAnne mentioned about certain harmonization, what we are trying to build here is a common framework, a central multilateral system where all the parties will be governed by the same rules with the same rights and obligations. So this will give a lot of security and ensure the safety of the ecosystem. And we can put this in connection with the financial crime aspect as well. So having clear objectives and having a clear framework and knowing that every payment will be checked by the system itself is also a good point in increasing the confidence and the trust between the parties involved. Apart from that, having an enhanced due diligence on each participant before being onboarded into the system is also a key point on that objective. But as mentioned before, I believe that regulatory support is really key on building trust among institutions.
So thanks very much, Manuel. So just to recap some of the points that have been mentioned then by the panel, and then we can dive down into a few of them in a bit more detail. So some of the main challenges we're facing in the market would be kind of a lack of data availability, to Mohamed's point, and here we have certain systemic challenges in that, particularly in the correspondent banking context. There's processing of transactions, payments and trade, which are being done on behalf of third parties for whom the intermediary lacks transparency, and the mechanisms which we have in place today to address that, primarily manual in the form of so-called requests for information, tend to be very cumbersome, slow, and have a lot of negative consequences. The next point was around building stronger mutual recognition between regulators and extending that on to financial institutions. The other point, MaryAnne, that you mentioned that I thought was quite interesting is this one of risk appetites. And then the last point that I would highlight is the need for sort of a common framework to determine kind of rules, rights, and obligations. If we can take a moment just to focus in on two of those points where there's seemingly a bit of conflict. The idea of a standardized framework or a common framework and indeed one of the assumptions inherent to mutual recognition with regulators is that taking a top-down approach here is going to reduce friction in the market. How do we reconcile the idea of creating standards in the market to reduce friction, together with the idea that every financial institution has its own risk appetite and will implement those standards in a way that is not exactly unique? To be sort of Tolstoyan about it, every unhappy bank is unhappy in its own way, and they all have their own standards for what they're prepared to accept and not accept. So how do we reconcile those 2 points together? And MaryAnne, do you want to start?
I don't think that you can ever reconcile those two together. You can come close, but as you mentioned, each financial institution will always have its own risk appetite depending on its own business model, on its own targets. But what could be beneficial is continued dialogue and discussion about the subjects, about the matters. So any concerns can be put on the table, and one can try to address them as much as possible. But I don't think there can ever be we can ever achieve one risk appetite across the board. That's always going to be a challenge, but a challenge that can be managed as much as possible through dialogue and cooperation.
And acknowledging that every institution is entitled to their own risk appetite, and that's something that can and should be determined sort of at a board level within the institution. Let's turn back, Mohamed, to your point around the need to provide transparency to counterparties or to correspondents. What is the tool that you at Banque Misr, how do you try to understand that risk appetite of your correspondents and ensure that you're sort of acting in alignment with that? Is that a manual process, or do you have some sort of tool that you're using in order to enforce that?
No, unfortunately, it's a manual process, and it starts with the due diligence where the correspondents do is the banks. And probably myself and my team has worked in many parts of the Middle East, so we understand a bit what the international correspondent wants, and it starts by that. They do a due diligence, an interview with us. They explain to us the risk appetite about the region, and we build our relationship with them based on the risk appetite. If they don't want certain transaction to pass by or to be figured on us, then definitely we will not pass it. Now, when with a very large bank like mine, definitely few things slip between the cracks or pass between the cracks. And here it comes our response. The response should be timely, should be quick, should be clear. We try to avoid any misunderstanding on any misanalysis of any transaction from their side because of a lack of information from our side. Also, definitely because of the cost of maintaining a high correspondence, some of the banks try to hide under other banks, which we all know, the nesting and so on. So these things we should be very clear on them. Here the technology comes to we avoid to do any transaction for any third party or any nesting to avoid any trouble with the correspondent. But as I said, the most important thing which built the trust is the transparency from both sides from the beginning. The correspondent explain his risk appetite or the risk appetite, what exactly they want, what they do and what they don't do, or what they allow or don't allow. And we from our side, we should respect this because it's a mutual relationship. So back to your question, yeah, it's manual, not automated.
Okay, so with this, Manuel, maybe it makes sense to ask a quick question from your side, because really in the correspondent banking context, you're sort of shaking things up a bit over at BUNA by, if I can be so bold as to say it this way, removing the correspondent in some way from the scenario. And one of the points that's coming out from what Mohamed is saying is that sort of in that correspondent relationship, it's about understanding the risk appetite and adhering to the risk appetite of a single bank. Or let's say you have a dollar clear and a euro clear and a renminbi clear and so forth. So a limited number of counterparties. In the BUNA scenario, there's a network without intermediary, which creates a far more complicated risk appetite management process. So how are you seeking to kind of address that that issue that will allow you to grow BUNA without necessarily being strung up on the risk appetite question?
That's a very good question, Shane, and it's really interesting because the BUNA setup is going ahead based on addressing certain challenges that were also highlighted in these works that are being done by the G20, the FSB, and the BIS in these last few years. And specifically on the building block of the regulatory supervision and oversight framework. So it is clear that for enhancing the cross-border payments and building trust and confidence between the participants and within the ecosystem, there is the need to align regulatory, supervisory, and oversight frameworks, but also apply anti-money laundering, counter-terrorist financing consistently and comprehensively within the platform. One of the important points of this is that we need to review the interaction between the data frameworks and the cross-border payments. So sharing intel and sharing information is very important to address all these issues and tackle all of them. And on this aspect, we need to help the participants to manage their counterparty risk. And I put this in line with the risk appetite that each bank may have. For that, we have implemented a due diligence on each participant when they are onboarding. And on the second piece, on the counterparty risk, we are working with you, Elucidate, in order to enhance the transparency and to enhance the risk rating of each of the participants. So the rest of the community will be able to assess those risk ratings and accommodate them to their own risk appetite. So this is a clear way of addressing this point. Of course, we will try in time to promote a safe payment corridors based on the interaction between different participants that have a well track record of compliance, and foster KYC and identity information sharing. I believe that this is very important. So sharing intel and sharing data is key for tackling these questions and for promoting the safety and the efficiency of the payment system.
Right. Thanks for that. Maybe we turn back briefly to Mohamed and MaryAnne for kind of one last question. Sort of taking a forward-looking view here, in order to kind of have an optimal market environment, or one where we see the benefits of regional integration in trade and payments, where small and medium-sized businesses are able to flourish, and their banks are able to serve their needs and so forth. Can we talk about what would be sort of the most impactful specific change, whether we look at that from the perspective of the regulators, the industry standard-setting bodies, technology companies, or financial institutions themselves? What would be the most meaningful change that you think those parties could implement in order to strengthen the trust and confidence and transparency between financial institutions to optimize the market? MaryAnne, do you want to start? You're still muted, yeah. Perfect.
Yeah, I was still on mute. From our perspective, I think the biggest impact the biggest impact of a change is to continue, and this is something that we have already started to do, to continue to engage actively with the industry and with other regulators in the region. At this point in time, even following COVID, use of technology has raised certain risks, but at the same time has made collaboration much more easier. And I think from a regulatory perspective, that's the biggest impact that we can continue to invest in, to increase this collaboration and cooperation and develop this trust between financial institutions. Continue to contribute more to the UAE AML agenda and any other regional efforts in this space. At this point in time, it's the key to continue this collaboration.
And I would ask a slightly contrarian follow-on to that question, which is, what do you think specifically the regulatory community cannot do? What sits outside of their scope? Because I think we're asking a lot of regulators constantly there to be standard setters, to be harmonized, and not all solutions, of course, sit with the regulator. So I'm interested to hear your view on what cannot be done.
Well, this cannot be just a regulatory solution. This needs to be a collaboration with the industry. The industry is on the ground. The industry is in direct contact with each other in terms also of the risk appetites of different entities, and that is definitely not something that the regulator can define for individual entities. So, as far as the regulatory authorities are concerned, we can provide the work on the framework, but in terms of the risk appetite, that is something that we definitely cannot define for individual entities, but we definitely can provide a platform for cooperation and discussion. So entities can come together, challenges can be identified, and then together the regulatory authorities and the industry can work together to find ways how to mitigate concerns at different levels. Perfect.
Thanks very much for that. And Mohamed, what do you see when you look into your crystal ball?
Yeah, I echo MaryAnne's view, and I totally agree. But however, in this era where we are, not everything is regulated, because the regulator will not cover everything. Now, the industry is not only banks. We've seen other players coming in the industry, telephone operators. You mentioned trade finance. Trade finance is not only done via LCs. No, on the contrary, I have recently seen, for instance, between my country and the Gulf, lots of commercial transactions are passing directly through the hawala or whatever the transfer of any money changers. Much easier, much quicker. The guy doesn't go to a bank and then fill lots of paper. He goes just to an exchange office and do his transaction in a minute. Here, the technology should come, and the technology will help a lot to scrutinize all this. A regulator cannot cover everything. We've seen when it came to the virtual currency, most of the regulator doesn't like it, doesn't approve it. But what happened? The market forced the regulator to accept it. We start now putting some of the regulators start putting regulation to manage the virtual currency, and it goes on. So future. Yes, it's technology and very important to connect all those parties who are not covered under the normal banking regulation, which we know for the last few decades, into what will happen in the future. And we've seen now, by your cell phone, you could do all your banking transaction sitting on one in a coffee shop. So I believe in few years, or probably in a decade time, banks, even the normal or the classic way of knowing banks has to change, and it will change.
Yeah, and I think in the last minute, that's a difficult bomb to drop, right? To talk about the role of disintermediation of financial services, the introduction of of NBFIs into the space, some of which are technology companies who are new to the market, some of which are legacy participants like hawala dealers who are very old, but nevertheless kind of allow a decrease in transparency and require new solutions to address those issues systemically. So With that, though, however, we're at time. So I thank the group very much for all of your participation. And again, thank you to the organizers for providing the platform. Please feel free to reach out to me or to any of our panelists if you have additional questions, anyone in the audience. Thanks very much.
Thank you very much.
Thank you.
Thank you so much, everyone, for the amazing panel discussion. We'll reach out to you. We do have question on the platform, but we'll forward it to the respective panelists so we can get that answered at a later stage. Ladies and gentlemen, that was a panel discussion, building trust and transparency, how technology can fight financial crime and build inclusive, fair financial ecosystem. Thank you so much to everyone on the panel for that amazing session. We move on to our next